Welcome everyone to How Would You Build It? We have episode 17. Rainier, welcome again. Nice to have you back.
Thanks, Bobby. Good to be here.
Yeah, keeping warm in this cold front that's hit South Africa, Cape Town specifically.
Yeah, we're freezing in Stellenbosch, that's for sure.
Yeah, no, it's really feeling it. And yeah, very happy to announce, Nick, thank you for joining us from Savant, the managing partner at Savant. Thank you for joining.
Thanks for having me, Bobby. Good to see you, Rainier. Looking forward to the conversation.
Yeah, I think I'm the most excited. I'm going to be absorbing the most out of all of this. So I'm really excited for today's conversation around accelerator programs. It's such an interesting topic because, you know, in all the conversations that we have in the space in South Africa, we realize that it is actually quite still a new concept. It's just still, I don't know, it feels like only in the last couple of years, people are really grasping the concepts of it and actually getting involved in accelerator programs. Just before we pressed record, Nick, you said you've been in this industry since 2002. So can you tell how it's evolved over 20 odd years now?
And it's been a really interesting journey. I mean, going back to 2002 when I had come back from studying in the States and wanted to work in venture capital in South Africa, and looked around to see all the venture capital companies locally that I could send my CV to. And didn't have too many options available to me. Ended up working for a life sciences incubator called Acorn Technologies, doing biotech and medical devices. And that was probably the very early stages of incubation and acceleration in the country. And it was kind of kicked off by a government program called GDISA. The scary thing was, nobody really knew what they were doing or trying to do. You know, there was this idea that we were going to be these incubators that went out and, you know, helped people to solve all the challenges that they had in their businesses and, you know, do all these amazing things. And I think there was a whole lot of oversell about what incubators were going to do without really being able to deliver on those in probably in a meaningful way in those early days, because, you know, they were misaligned incentives and all sorts of other challenges. So, you know, I think one of the big challenges was, you know, very quickly incubators got a very bad name. So for a long time, you know, when I left Acorn and started Savant, we didn't want to call ourselves an incubator. You know, we wanted to call ourselves pretty much anything besides an incubator, because, you know, it had such a bad reputation in the industry because they had dropped the ball. And I mean, and to your point, you know, this idea that incubators and accelerators are only really coming into their own now is because over the years, the ones that have been around haven't really performed. So only now do you see, you know, the guys more consistently doing a good job as an accelerator or an incubator. So yeah.
And to that point, Nick, I mean, do you think, you know, in the olden days, the incubators and accelerators, they got money just for doing this stuff, right? They didn't really have any aligned incentive. Now in Savant, you've got a fund and you also invest in the startups that you work with. Isn't that a fundamental thing that's necessary to make accelerator work? Because otherwise you're just checking boxes, right? I saw all these startups. We did a course on how to pitch well, and now we're done. Thanks for coming.
Yeah, no, I mean, not even there. I mean, I think there's still many incubators that don't have that alignment. They get paid to do something, you know, and there are incubators and the incubators. You know, what exactly is it that you do? What are the outcomes? So, you know, until such time as you draw a very clear alignment between what it is you're doing and the outcomes, then, you know, it's very difficult to ensure that you are both, you know, sustainable in the long term. You know, there are a lot of incubators that get paid for incubation without the kind of alignment. So when I left Acorn, I think the first thing I did as a private incubator, you know, we weren't funded. We worked on risk, and we said, if we help you achieve an outcome, we will participate in the upside of that outcome. So it was, you know, that's what we look to do, is like take that kind of, here's some money for going and helping these people to, how can we help you, and how can we demonstrate our belief in what you're doing by aligning our outcomes with your outcomes. So, yeah. And I think there needs to be a whole lot more of that. I mean, to this day, there's still a lot of debate around how you fund and support incubators on a sustainable long-term basis. And the fact of the matter is, incubators, you know, it's a long, tough game. I mean, we've had some successful businesses, and you know, it's still very, very tough to build a sustainable model. So you always look at a situation like that and you go, well, who benefits from our product? And our products are successful businesses. So to your point, Rainier, you know, the alignment between an incubator and a fund is very clear. You know, if a fund is getting great pipeline that works and has a higher probability of success out of an aligned incubator, there's obviously a very clear benefit, and therefore, you know, the incubator really should be supported by the fund. So, you know, that's kind of where we're thinking. I mean, there are lots of benefits on either side for the two organizations to work together. And if you look globally, you see what the guys have been doing globally, particularly in the hardware deep tech incubator side of things. You'll see, you know, the likes of a Hacks or a Lemnos Labs or whatever set up and then rolls into a fund. So now it's more about, you know, it's a SOSV, you know, Hacks is part of SOSV. Lemnos Labs is essentially a fund that has got an incubator component to it. And yeah, that's kind of, you've seen best in class going that direction where there is an incubator and a fund aligned. And we see that happening here. I think for that to be completely linked in our scenario, we're going to need a much bigger fund. At the moment, our fund is way too small to support the incubator, but you know, we're moving in that sort of direction.
So obviously incubators is like early stage, right? This thing's still, you know, it's pretty much a napkin idea. So can you just tell me, or maybe use an example of when you got a napkin idea? What is kind of the things that you're looking for? Team, products? Is it the industry? Like, what is it that your process that Savant does that kind of says, we're willing to take this bet?
Typically, I'm looking for differentiation. You know, I don't want you to come to me and say, oh, I'm going to do the same thing that somebody else is doing, but I'm going to do it better or cheaper than them. You know, that doesn't really, you know, get us excited. And those are really challenging businesses to build. So what we're looking for is great innovation that is differentiated. We've got tech teams that are really good at what they do, that are building, you know, interesting differentiated tech that is going to help them build a product that sets them apart from what other people are doing. Clearly, we got to be, you know, confident that there's a market. You know, that's always the big one. You know, you've got to have a product that you can sell to people, and you need to, as a core of what we're looking for from a Savant perspective, and this may differentiate us a bit from other people, is that we want to see that from a technology perspective, you've got that secret sauce to make this differentiated innovation work. And I think, as you said, because we get involved so early, we're looking for, you know, that innovation team that are able to make it work. Our goal is to see what we can provide to these innovators to take their business to market, you know, to turn that tech into a product and that product into a company. And that's, you know, there's a lot of components around that innovator that need to be added in order to make it successful. And we don't always get that right. It's a tough game putting that team together. But, you know, one of the things that we do see is that if you've got a very strong technology base, then it gives you a certain amount of leeway in order to go, okay, we tried it this way, but it didn't work, but let's pivot a little bit and try it that way. And because, you know, because you've got a solid technology underpinning, you're able to, it gives you that leeway to pivot and move and experiment and do things in different ways, without, you know, having to worry too much about competition, because you're doing something quite different and quite differentiated. You know, pivoting's, you know, really, really reliant on a very, very strong team. So we're able to go, right, we believe in this tech, we believe in our innovator. Let's work with them to build something that's going to be, you know, successful, but able to pivot into different areas.
So how much do you grill the team to understand how much of a tech capabilities they have? Do you do a proper interview process? Like, should guys that are planning to come to Savant for help, what should they be looking out for?
Well, look, I think one of the things that we do have that also is a bit differentiated is that we've got a strong technical team who are able to understand, I think, better than most other, particularly investors in this environment. But then again, it's, you know, there's you know, if you've just invented the next component that's going to make fusion, there are probably very few people out there that are going to understand that well. So really the success of your business and the understanding really is a process. So, you know, obviously we do a bullshit check. You know, we'll go, okay, that's, you know, we very quickly understand whether people have got perpetual motion machines and things like that. But then really it's about going through a process. The best person to determine whether you've got a product or not is your customer.
I like that.
You know, really we want to go and you know, test it with a customer. That's really, we want to believe in people and help them get to a point where they can get their customer to test it. And what's great is that the incubation process allows that. You know, the incubation process allows us to work with people and get to know them, get them to get to grips with their business a bit, and then work with them to a point where you can, you know, we sit around and together understand whether their technology has a product market or not. And, you know, we went through an investment readiness program last year, actually finished earlier this year, where, you know, of the 4 businesses that came through really successfully on that program, 3 of them demonstrated product market fit quite clearly, and you could see their progress because of it. But there was one business where, you know, there was always uncertainty as to whether he certainly had that product market fit. His technology was going to work in this particular environment, and the customer acceptance just never got there. And, you know, it's like a realization and an understanding that you come to together to go, you know, we've tried, but, you know, it isn't there. And I think it's quite, you know, it's beneficial, because then the onus and the you know, it's right. It's not a case of, well, you don't understand what I'm doing. It's a case of, well, we've tried this, you know, your customer isn't there. You need to go and pivot. You need to go and work out where else you can take this. We'll guide you and support you and whatever. But yeah, it's a good process. And if your customer says they don't want your product, that's the be all and end all, isn't it?
And what would you say when they're willing to pay for it, right?
Well, there's another. There's yeah. No, I mean the number of companies that we've seen over the years that have got fantastic customer reviews, got people that love their products, and we're like, so how much do they pay for it? Oh no, it's on an unpaid trial, and, you know, we gave them things to test. Yeah, and it's, you know, the number, and it's like, until such time as your customer is paying for your product, they're not a customer. And you don't have a business.
Very big difference. I know a lot of people that actually, when you start using the word user versus customer, it's like, oh, there is actually a difference. You know, there's a very big difference.
Yeah, exactly. Yeah.
But René, I know you're excited. Now, I've worked on a very few hardware products, right? So not just that software elements. Is when you marry the two, hardware and software, together, it seems like an amazing kind of journey. I've been on 1 or 2 where it's got to a point, it was exciting. You really, because it's generally a real world problem that you're solving when you do a bit of hardware, not just that software element. So Renee, I know you're excited because Nick's involved in hardware products. What is your view on it, and questions for Nick in that hardware space?
No, I just think we've got so many talented engineers in South Africa, and so many problems to solve. I think there's much more space for hardware startups, but yet they're few and far between. But it's also, the notion is that it's really expensive and it takes a long time. So Nick, I know you guys do incubation, but I believe you also do some acceleration. Can you get a hardware startup down to launching within a few months, even? To just shorten the expense of getting to that point of being able to ship something.
Yeah, there's certainly no hard and fast answer to that. It is possible. It is possible, and we look to partner with people that are going to help us accelerate those processes. You've got additive manufacturing and 3D printing and all sorts of things that can help you get to a product that you can test on the market really, really quickly. Again, on the other side of things, we've invested in a couple of companies that are building medical devices that are going to get to market and going to go generate revenue in about 5 or 6 years' time. So there's the other side of it. I think we've recently been talking about the deep tech and hardware opportunity in Africa, and while there certainly aren't as many people doing this as there are software engineers solving for X, Y, and Z. There are a lot of people doing, there are enough fantastic engineers solving very real problems. One of the points that I made was the great thing about the environment that we live in is there are lots of challenges to fix, and they're very real. We live in a physical world, that when the lights go out, that's not going to get solved by an app. You're going to know when the lights are going to go out because of an app, but they're not going to fix it. So, that's one of the points that we keep selling, is that they're fantastic engineers doing really, really great things. We see people doing it, amazing things on a daily basis. And to your point, yes, people are scared of it. I mean, we are, as far as we understand, we're the only dedicated deep tech and hardware incubator and fund on the continent. Which is a bit of a travesty. But the fact is, it is scary, and I think it's a combination of there needs to be the right skill set, the right experience, the right dedication to this. You need, if you're going to be good at hardware and deep tech, you need to do that all day.
And for 20 years.
Yeah, I've been doing it since 2002, so it's been a while. And I think part of that is you need to accept that timelines are long, that the complexity is extremely high. I mean, you talk, Bobby, about the combination of software and hardware. Back when we started, the vast majority of the companies that we worked with were just hardware. There wasn't a software component to them. These days, if somebody, of our current portfolio, there are probably 2 out of 35 that don't have a very strong software component. However, I always counter that by saying you're solving real problems, which is really important, but you're also building really impregnable competitive environments. If you solve for challenges, once you've solved those challenges, you're setting a great product on the market, that your competitors are really going to battle to catch up with you. So, you need to obviously always keep innovating, but ultimately you build yourself a very, very strong competitive environment that, your competitors just are unable to come to terms with. Renee, we touched on it earlier, but the guys at, Chris Leatt at Leatt Corp, innovated around a neck brace for motocross I think he started off in about 2003, 2004. I worked with him, I think in about 2007 or so. Can't remember when, but they've built a very innovative product with a strong intellectual property suite that is impregnable. I mean, there's anybody with a neck brace on the market today, is either selling their neck brace or is licensing theirs. And they've built that business on the back of the success of that neck brace, which is fantastic. And it's in the early days, obviously it was 100% of their revenues. These days, it's a very small component. Well, a small component of a much bigger revenue base, but ultimately, that business was built on a piece of very strong hardware technology that continues to this day. It's amazing.
And Nick, I think a lot of people actually say that people don't see it. They look at SaaS and they look at these business models that scale incredibly well. But if you look at hardware, specifically hardware software combination, there's two things that's very interesting, and I'd love to hear your thoughts on it. One is when you get a hardware product right, the margins are enormous. Like you can really make massive margins on that. And the second thing is actually, to your point, it really entrenches your SaaS model, right? So if you've got a hardware component that performs a certain function, that also passes data back and then does a secondary function using software as a service, you can't take that out. Like it's entrenched. So it's almost based off both models, right? You get the SaaS that has an amazing moat, but you've got a hardware component that can also have massive margins on. So would you agree those are the two primary business advantages of going the hardware route?
Yeah, look, I mean, these days, the business model innovation available to you is great. I mean, and it's also, it's something that we really look for, the ability to get your piece of hardware into an environment. You have a little bit of a land grab there, and then you can not just continue to generate revenue from the base hardware, but then also go, well, what else? We're in this space. What else can we add on from a service offering perspective? So there's a lot of opportunity there. Again, the complexity of getting that combination right is high.
Which also makes it difficult for someone else to do it.
Yeah, it's not trivial, but once you've got it right, then you're in a very strong position to dictate things on the market. So it's when we're able to show successful businesses going out there, demonstrating that they're solving real problems and being very commercially successful at the same time. Then people will come to that realization. We do see far more interest in what we're doing. A lot of investors come along and go, is there enough opportunity? Is there enough opportunity in this space? We don't see it. And one of the reasons you don't see it is because all these scientists and engineers need a whole lot of support to get to the point where they've got something that's interesting for somebody investing in Series A or Series B. Everybody sits there and waits in Series A and Series B and goes, where are my investment opportunities? And they're like, well, they need the support, they need the investment. You can't bootstrap a FDA registered neck brace from your garage. You need significant investment to build the thing, get it registered with the relevant authorities. So it needs that investment at a very early stage. Talking recently in a conference about the requirements, it needs the support. It needs more of the right kind of early stage government financing for these things, because we're the earliest stage commercial investor in the country, and we still see a lot of stuff that is too early for us. Sure. That needs technology development support. So if we look at, we've got the Technology Innovation Agency, which is there. It has its challenges. I know a lot of people will acknowledge. I think they will acknowledge that they've got their challenges, but at least it is there. At least we know that there is that funding available. it just needs more of it, more support, you know, it needs to be faster, etc., etc. But it is there. So, you know, as these things improve, things will come through the pipeline faster. You know, more recently, if you look globally, what happens in the hardware and deep tech space, up to 20% of the investment going into this field has come from corporate investors, corporate venture capital over the last few years. South Africa, in South Africa and Africa, that's almost zero. You know, so we've worked really hard, particularly in the hardware and deep spec space. So there's been very, very little money going into that very early stage. So we've worked really hard to get money, you know, to some corporate commitment, and we've seen more recently we're partnering with Stillwater. You know, they're putting money into very early stage businesses that are solving some of their challenges. So it's, you know, 20 years down the line, we're starting to see some people come into the party, and yeah, we've certainly seen over the last, you know, few years acceleration of that. You know, acceleration of people's understanding of what we're doing, willingness to put money into it, starting to see the outcomes. And I mean, it's, you know, it's a bit slower in my space in hardware and deep tech, but we've certainly seen it happening at a faster pace in, you know, the more sort of software focused environment.
So Nick, I'm wondering, like, I mean, a fund can be too small, right? Because you can have, if you take a 2% fee on managing it, like if you've got a 100 million rand fund, you've got 2 million rand a year, which might sound like a lot, but as soon as you add a lot of expertise and legal fees, it you know, you might be finished by the third month of the year. So 100 million might not be enough, but then on the other hand, you could go, let's build a 10 billion rand fund, but not have enough deal flow, right? So in your experience, like having looked at Africa as a continent, and you've mentioned earlier your fund too is going to have a bit of a more focus across the continent. What is like a good fund size in your view? What is big enough that it can maintain and support the portfolio companies, but also not too big that it struggles to find quality deals?
Yeah, look, I mean, that's a really challenging question. Yeah, what size do you need to be in order to write the number of checks? So it's a real balance. So you got yourself a R1 billion fund. You know, what stage are you investing in? So what deal size? So suddenly you go, okay, well, we've got a R1 billion fund, and we're going to be writing pre-seed and seed checks. So we're going to need 100 deals. You know, you need to do 100 deals.
And you find 100 deals.
And then, well, no, just I'm confident you'll find the deals.
Okay.
But doing 100 deals in the timeline that you need to do it, suddenly you then have to build a much bigger team. So I think one of the things that we do see is, yeah, as soon as you get a little bit bigger, you want to write bigger checks, which then takes you into a different funding environment. So you were previously going, this is where the challenge lies. And we've always said, there's always been a real need and a real challenge in this pre-seed and seed stage. And suddenly, because you've got to write bigger checks, because you can't do 100 deals in, you know, if you want
manage
to do
all
them
of
properly. And manage all of them, exactly. You suddenly find yourself doing, you know, Series A deals, and then you're going, okay, well, there's no deal flow because I used to be doing those pre-seed and seed stage. So there's a real balance. You know, I'm very reluctant for us to play too far down the line, but I do see the need for us to support our businesses beyond pre-seed and seed. So, you know, the next fund we'll certainly be playing, as well as playing, you know, relatively early, we'll still be playing a little bit later. Fund size, you know, I would say anything from 300 to 500 million is probably the minimum fund size in order to be able to support the team that you need to make this viable. Then again, as soon as you're going there, you go, okay, well, pre-seed, if we're writing, you know, South African and African pre-seed deals of like 1 to 5 million rand, you know, you're looking at a lot of deals and say, okay, well, how many pre-seeds? So it's complex. It's a complex environment.
Very interesting game.
It's an interesting game, and it, you know, ultimately, you know, if I go back to what drives me, you know, I want to build businesses. I want to build hardware and deep tech businesses that are successful. And so I go, well, what role do I need to play? What role does Savant need to play in this ecosystem in order to do that? And you know, it'd be easier to go, okay, we're going to raise a bigger fund and write later stage checks. But it's not what the ecosystem needs. So, you know, we will continue to play at the earliest stage while still supporting our businesses. Well, supporting our businesses beyond the stage that we currently are able to. You know, one of the things that we like to see is our businesses learning their game on their doorstep, making their mistakes locally, and then on the back of you know, getting all their ducks in a row locally, fixing anything that they've broken, preparing to go internationally, then launch onto the international market on the back of, you know, solid unit economics, the understanding of how to do your product at scale, you know, all those things that you really require. We want to be able to support our businesses. So we're able to support our businesses to get to that point. The next stage is we want to be able to support our businesses when they take that step into that international market, you know. They take that step into the Brazilian market or the, you know, the Indian market or, you know, the Nigerian market or whatever it might be. We want to be able to support them in that alongside a Brazilian or an Indian or a Nigerian investor. So that's, you know, being able to play at that stage is going to be important to us.
So on that, Nick, most African companies or South African companies that go up in Africa fail. So some people say it's just not possible. Like, what would you say?
I think you'll probably find that there are South African businesses that have succeeded. It's not the usuals. It's not the corporates that have gone up into Africa. I think you'll find that there are companies that have gone up into Africa and have succeeded. I mean, I know I don't have any off the top of my head, but, you know, yes, they're famous examples of South African corporates that have gone into Africa with the perception that they're the big dogs and going to go and show people how it works, and the continent has schooled them appropriately. Then again, you know, that seems to be the case when they go into other territories like Australia and the UK, etc. I mean, maybe there's a bit more success in the UK, but I mean, you know, our friends at Woolies foray into Australia, you know, certainly comes to mind. So maybe it's corporate arrogance, but you know, I think Africa is hard. I think going into any territory is hard. You need to be very aware of the requirements to doing that, and I think you know, there are plenty of examples of what not to do. So, you know, until people get that message, then it's going to be hard. But you know, if the markets are there, I don't see why not.
And which territory specifically do you think there's good opportunity?
Well, ultimately, it's really about product market fit, you know, and big markets. You know, ultimately, we're by and large, the companies that we work with have invested in, you know, aren't going to be VC scale businesses on the South African market alone. So they need to find opportunities outside of the borders. And it's, you know, it depends entirely on what you're selling. You know, if you're selling a great product, you know, in South Africa, it may have some applications in Kenya or Zambia or Nigeria, but not all of them, you know. So it really is very definitely market dependent. You know, what have you got? Have you got a PV photovoltaic thermal solution or a biogas solution? They have different applications in different markets, and they have different needs in different markets. So it's very market dependent. And it's really about finding big markets. You know, that's what we were looking for, you know, an aligned market that is as big as possible. So,
And so you've been doing this for, like we've said now, 20 odd years.
Yeah.
Surely, I mean, you've had to mentor, as you've kind of gotten more and more experience, how do you find your mentorship now? Like, what kind of mentorship are you having to give these founders that they're kind of lacking that you're seeing in these recent times?
One of the things that we see is the businesses that come across our desk. There's a lack of understanding around the process of investment. There's a lack of ecosystem maturity, and this is what a deck looks like. And we do see some fantastic decks. We do see some businesses that have got all their ducks in a row, and it makes them very easy to invest in. But the majority of the companies that we see are not investment ready. And so one of the things that we're doing, less of like a mentorship thing, but generally as an educational thing, is like find ways to educate the market in, this is what you need to look like in order to raise funding, and do so in a timely manner. Obviously you want to be able to go to a VC and say, I'm ready for money, and 3 months later you've got a check.
So is there a sign that you see that they come and they already have? Like, what is that like? You've got that, I feel confident in you guys. Is there a thing or something that stands out?
It's typically, they'll come along and they will understand the language that you're talking about. The language is right. They'll have a deck that talks to the right things. They'll have all their ducks in the row when it comes to, they'll have a data room with all the relevant information in the data room. They'll have all their CIPC documentation. They'll have, their agreements. They'll have their IP. Everything's there. So they understand what the requirements are. And they're not just a flash pitch deck. They've got the backing behind it. They understand what the deal terms could look like. They're reasonable in their investment. They don't think they're sitting in San Francisco when it comes to valuations. Those sorts of things. It just makes it that much easier to finalize an investment. Then again, we don't expect businesses to be like that. We understand, these guys typically are very technology strong, which means they're probably weaker in other areas, and we're there to work with them to fix those areas. Ultimately, it's about your customer. Who's your customer? How well do you understand them? Why do they need your product? How are they going to pay for it? Those are the absolute key questions that I would drill into all our founders. If you don't know who your customer is, why they're going to buy your product, how they're going to pay for it, you don't have a business. I mean, we've got businesses that have got great products. They've got users. They've got people who use their technology, that use their products, but don't pay for them, and that's not a business. That's not a business that we can fund. And until such time as you have that real strong understanding of who your customer is, as soon as you really start delving into that challenge, you're going to really battle. And once you start getting there, then you're going to immediately go back to your product and go, this is where my product's not right. And if you're backing to get your customer to buy your product, it's not because the customer's wrong. It's because the customer's right and your product's wrong. You got to go back to your product and make sure that it works for the customer, whether it's, pricing. Pricing.
I was about to ask about pricing.
Pricing is a huge challenge. I mean, we see both ends of the equation where, the guys come along and they underprice it, and they get lots of traction very early, and you go, well, that's great, but you can't build a business, on a 25% gross margin, not this type of business. It's just not going to work. You need fewer customers and a much higher margin. On the other side, we see lots and lots of customers, but without the ability to pay. And those guys, they go, well, are we selling to the right market? Is the audience right? Or do we have to go down that route of working out how we work on an innovative business model that is going to really get somebody else to pay, or something along those lines? But it's an extremely tough one. You know, understanding what your pricing model should be is, you know, one of the toughest components. And you know, it's kind of one of the things about the South African market or a local market is you test it out, you know, see what the customer will bear. And we've done that a few times where we've said, right, we'll give you a little bit of money to go to market to understand your customer and see what they will bear. And, you know, draw some of those price elasticity of demand curves and, you know, see where you end up. But yeah, it's even then it's pretty tough.
So Renier, when would you've been exposed to many kind of startups, when would you feel comfortable sending a startup to Nick?
Geez, I think any stage.
Any stage. But that's right.
If it's a great founder and a great product, I think there's no time that's the wrong time.
No, and there isn't a wrong time. And I mean, that's the great thing about the relationship between the fund and the incubator is that, you know, depending on where things are, you know, if we like it, we'll say, right, here's the incubator, here's our build program, here's a mentor. We've got a strong mentorship program, which I think is absolutely critical in successful startups. You know, we're also suckers. We love tech. So you've got cool tech. We're going to try our best to help you. You know, even if that's going to giving you some tough advice. You know, we're fortunate that we've got a fairly big team. So you know, we can throw a bit of time and effort at our businesses at a very early stage and hopefully point them in the right direction. So yeah.
So for a startup that wants to contact you, what is the first thing they need to put together? A pitch deck. What do you want to see first?
So you know, I've always been very wary about pitch decks. You know, the thing about a pitch deck is we've seen a lot of people get wowed by sexy pitch decks. You know, it's nice if your pitch deck is sexy. That's cool. You know, I'll give you a bonus point mark for that. But ultimately, you know, it's really not about making your pitch deck sexy. And I think part of my frustration about the ecosystem sometimes is that, you know, people think that, you know, unless their pitch deck is sexy, it's not going to get through. Your pitch deck needs to talk about your tech, your product. You know, why is your technology a product? Because often people just talk about their tech. Why is it a product? Who your customer is and why they're going to buy it. You know, that's really, you know, what I want to understand. What problem you're solving, you know, those things. And it doesn't need to be sexy. I want to judge you on, are you telling me the story that I want to hear?
That's the word I was looking for. It's the story. The pitch decks that I've been exposed to, you kind of look at the storyline that it's telling you, and can you read the right story? That's kind of, and it's who's your customer, who's your, you know, client base, and all of that stuff. So it's the story that's the most important.
The story is important, and part of that story is who you are. You know, I was on an investment committee today, and there was a misalignment between what was being presented to us as the IC and and who the team was. So I'm like, how did you guys get from where you are to here? And then they told me this whole other story about they had, you know, there's this other guy that works with them that they didn't talk about. And I'm like, well, he's key to making this whole thing work. So, you know, you need him at the front rather than at the back. You know, so I'm very keen on understanding that you've got what it takes to demonstrate that you actually understand what it is you're talking about. Otherwise, I'm going to, if you're two accountants and a marketing executive and you've solved, you know, cold fusion, I'm going to
You guys are making me excited, Joe. Hey, reading. I can get some funding.
Yeah, exactly. Jeepers, was that you know? No, and interestingly, we have seen a few accountants coming to us solving problems that, you know, they can't understand why their engineers can't solve. And we're like,
So say someone
well,
does
a lot of engineers would say they come across accountants that can't give them money to solve the things they want to solve. So
that's very true.
So I just want to finish on IP, because what if I do solve fusion? How important is it to protect myself? And I know you feel quite passionate about this. I think you were bringing it up earlier as well.
Yeah, I just sometimes speak to founders and then they go, oh, sign my NDA before I have a conversation with you, or the first thing you're going to do is register our patent, and that I've never seen a patent process go fast. It seems to take a multitude of years, and then it also seems like it's not worth the paper it's written on, because it's only for a territory you're probably not going to launch in anyway. It sounds like an extremely complicated thing, and I'm yet to come across someone that's got a real tangible benefit out of it. Although I've heard stories. So Nick, what is your experience?
I very much largely agree with you, with the proviso that there are circumstances where it is really relevant. There are environments where it's really important that you have that IP protection. At the same time, the number of businesses that I've worked with, that I've invested in, that have spent lots and lots of money on patents and intellectual property that has gathered dust in a drawer, that's had zero benefit to those businesses is huge. I would say the majority of businesses that have spent lots of money on patenting and IP have not ended up using that IP in their commercialized product, or has not benefited them in any way.
That's so interesting, actually. Wow.
So at the same time, we have a minority, but not necessarily a small minority of businesses that their commercial success is completely predicated on their patenting. I mean, Leatt is a case in point. They have built a fantastic IP portfolio that is the bedrock of their commercial success, because when they put their product on the market, they were copied by all and sundry, including, Alpine Stars and everybody out there. And without a registered patent, they were dead in the water. So they would not be here if it wasn't for that. So, it's really tricky, and it's extremely tricky to know at that early stage where you should patent, what you should patent, etc. What I will say is that if you believe you've got tangible IP that needs protection, do so before you put a product on the market, because you can invalidate your intellectual property if you don't. The other point is that we have a patenting system that allows you to file a provisional patent in South Africa for very little money. 10 to 15,000 rand. You can file a South African provisional patent, which really kicks the can down the road. It gives you that priority date, and it gives you some time to get your ducks in a row. So my advice is patent as late as you possibly can, but before you have commercialized your product. Use non-disclosure agreements with the right people. And to your point, René, if somebody comes to me and says, look, I'm not going to talk to you without an NDA, you got to understand that I'm not in the business of ripping people's tech off. I wouldn't last long. My job is to invest in people's tech. So, ultimately, it's sometimes quite tricky for us to sign lots of NDAs. I haven't come across.
Yeah, I mean, if you sign 100 NDAs, that might be the only thing you do, and the second thing is you might not end up doing any work because you're not allowed to talk to anyone about anything.
Yeah, exactly. So I think investors, and we're not here to build. We're not here to build your tech. We're here to So sometimes. It's as simple as, what I'm talking to you about is confidential intellectual property, and get acknowledgement that it is. So, you can have confidential conversations, and, don't don't talk about your secret sauce. So you can talk about your technology. I can talk about, you can talk about cold fusion without talking about, why you've managed to make cold fusion work, for example. So, if you can't talk about your technology, your innovation with me in a way that doesn't invalidate your IP or doesn't, share your IP with me, then you probably don't understand it too well. I mean, I'm not an expert in any field, and most of the people that you speak to aren't. Then again, if you are going to talk to somebody who's going to manufacture your product for you, therefore has the capability and the capacity, sign an NDA with them. So you be selective about who you sign NDAs with.
That makes sense, yeah.
And just reiterate that you are sharing confidential information. So but one of the other things that I see that people spend lots of time and effort on at a very early stage, as opposed to going out and building their business and selling products, is structuring. Offshore structuring. We've got to go set up some kind of structure in that has Delaware. a holding in Delaware and a cross holding in Holland and a offshore structure here, and you spend lots of time and effort and money on it, and
it's interesting though, because we've spoken on this podcast before about like, what was his name, Mark Shuttleworth, who signed and had his products IP'd in South Africa, and it bit him in the arse in the end.
Yeah, but it's what Mark wanted to do. He wanted to take his entire holding offshore at the same time, and he probably did that. His timing was wrong there. So there's a time where it makes sense, okay? And the time where it made sense was before he sold his business for $600 million, but after the fact that he had, was getting significant commercial traction. So there's a timing. Ultimately, spend your time and effort on building your business, and as soon as you've got traction, then go and structure your business in the best way possible for you and your investors. So, for example, my investors in Savant Venture Fund 1, they're South African investors. They want companies that are registered locally.
Solving local problems.
And so there's, ultimately, if you are going to go offshore, you want to live offshore, then, follow that route, but you don't need to do it as the first thing you do. I've got this idea. I'm going to expend 600,000 Rand on a patent, and I'm going to register, 3 offshore entities with cross shareholdings. And then I'm going to think marketing. Then I'm going to think about whether they've got product market fit, and I can turn it into a product. I mean, I'm being flippant, but we do see guys that are, to an extent, thinking along those lines, and it does get frustrating. Build your business first. That's the one thing.
I like that. That is probably my biggest takeaway from today's conversation, is build that. I was kind of thinking about the conundrum of product market fit, understand your business, understand when to go with IP, but at the end of the day, know your customer, get the business going. And I think that's my biggest takeaway right now. What's been yours?
Yeah, absolutely. I think way in the beginning, something else that stood out for me was Nick said you have to be really smart and know what you're doing in order to pivot. And it just reminded of, when no matter if you're building a hardware or software startup, eliminating things that don't work, the faster you can do that, the faster you can eventually end up in the place where something works. And if you don't really know the subject matter well that you're working in, the chances of eliminating things that aren't working will just take so much longer. And that's just a recipe for failure.
Yeah, maybe one other point to take away, and this is something that we're trying to promote and we're trying to push really hard, is if you look at a lot of successful startups in those ecosystems that work really well, particularly thinking US, etc. They've got mentors and advisors and things like that. For some reason, a lot of South African startups think they either don't need it or aren't sure how to get themselves a mentor or advisor or whatever, or don't want to incentivize them. So we see a lot of mentorship programs that are, we'll have a mentor that, is just there for for the good of the world or whatever. We want to build mentorship programs where we can align startups with the right kind of mentor or advisor, and there's an agreement that says we will provide you with support, and if our support is successful and we help you do something, I'll take some equity. And so there's both sides hold each other to account, and that's really important. Find advisors that work for you and listen to them. That's another piece of advice I'd really give. Find somebody who's done this before. If they can help you avoid one mistake, it'll be worthwhile. So
I like that. 1% better, right?
Every day.
There we go. Well, Nick, thank you so much for joining. It's been a great conversation, but thank you very much.
Yeah.
It's great to have you, and René, thank you, and we'll see you next week.
Thanks, Nick. All the best.
Good stuff. Thanks, guys.